This is Naeem Aslam. Those of you who don't know, I work as a chief market analyst for AvaTrade. I run the entire research department for the company on a daily basis. If you are on our blog reading the research, that research is run and written by myself. We try to provide you as much detail as possible on every single day, and of course about the week ahead as well, and some other major movements. That's in relation to my background. I come from hedge fund trading. I worked as a hedge fund trader for Bank of New York Mellon, worked as an equity trader in Bank of America, and have several years of experience in Forex and equity trading. So that's a bit about myself. How about you guys? So in a series of a question that I'm about to ask, which I always do in all of our webinars, the first question that I wanted to ask you guys is that how many of you guys have attended any of my previous webinars? If you have, please say yes. I see a lot of familiar names saying yes, and then of course, few people they're saying no. That is pretty good. Okay, so thank you for those of you who are attending again and for your commitment to learn, because that is these webinars are all about, because this is your opportunity to learn as much as you can and then ask questions as we go along, because obviously in every single market, in every single webinar that we are holding and discussing markets, we are performing the live analysis, we're performing the actual price action. We do not rely too much on the indicators, but on the price analysis itself. And that is the most critical thing, because everything else is lagging. The only thing which isn't lagging is your price. Now, the other two questions, folks, if you have been trading for over a year, or let's say under a year, please say yes. Okay. So again, we got a lot of people who are newbies to this trading world, and they've only started it fairly recently. This is a pretty good sign, because obviously this is a great time for you guys to get involved in this market. Right, okay, the second and the final question before we begin, please say yes if you have been trading for over a year. Okay, great. This is really, really good. Okay, so what we have is we have a crowd which consists of new traders, and we have a crowd which also has traders who do not have to, who actually have good experience, but they don't call themselves highly skilled, right? So this helps me to, really kind of filter and then bring the conversation to a level where you guys can really understand. And that is the most important thing, because I don't want it to talk about something which is too complicated for you guys to understand. So these series of questions kind of really help me to achieve that. Now, for those of you who have attended previous webinars, bear with me for just first few minutes while I run the usual housekeeping stuff. As always, it is important for us to go through this slide of disclaimers and risk warnings. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors, who will be in much better position to help you and guide you with respect to that. Now, before we begin any further, folks, as always, I cannot emphasize enough about the importance of Twitter, because everything comes out in the market these days. It breaks more quickly on Twitter than anywhere else. So if you are trading Forex, if you are trading equities or commodities, and see there is a sharp move in a particular derivative, and you wonder what is the reason behind it, folks, the first thing that you will, the first let's say, tool that is going to really give you that sort of information in pretty much real time is Twitter. Again, I cannot emphasize the importance of this. This is very, very important for you guys to have your Twitter accounts. And if you do, please do follow me, and of course follow AvaTrade, and I will show you how to do that in a bit as well. But the key point over here is that the information that is likely to move the derivative prices, whether it's the Forex, whether it is equities or commodities, is you are going to get that information much quicker if you are on Twitter, if you have the notifications on. And secondly, on a daily basis, like I said before, we do our fundamental analysis on our website in a writing form, which is a huge in-depth report. And for those of you who just don't like to read too much and then just wanting to get the information given out to you guys in a very simple way, then please do head out to our YouTube channel. Over there, in a 4 to 5 minutes, or maximum 7, I just explain what is really likely to happen in the market, how the market performed yesterday, and where do we go from here. And more importantly, what factors are likely to influence the price. So these are the important things that we really discuss. And then secondly, for those of you guys who are very much technical traders who would like to trade price based on technical price levels, I also do a video based on that as well. Now, where to find these ones, because we don't want to spend too much of the time on these things. We wanted to really get on with the price action, because in a few minutes time we are going to get the most important information, that is your ADP data, and then I wanted to show you the price action of that in real time. So what you can see is from here, that is the handle. So please do come and follow, get involved, get engaged, ask questions as much as you can. Again, here's a small snippet of the video. It gives you very much the information, and the rest of them throughout the day, you get all the important information that you are more likely to get. And with respect to Twitter, now how to find AvaTrade, you go onto your search column and then right over there, not Twitter, obviously, write AvaTrade, if it allows me to do that. Here we go. And now Twitter should really suggest you that account. And then there you go. Please make sure that you follow the sign which has, verified sign, because that is the AvaTrade Twitter account again. It's very important for you to get involved in terms of your YouTube channel. So it is again AvaTrade, and here you will find all the videos. Now, folks, let's get on with the agenda for the day. But before we do that, let me pull out the Forex Factory and then see what exactly we are going to discuss. Now, obviously, for today, the agenda is the importance of the US non-farm payroll. It is about the masterclass is all about US non-farm payroll. But what we're going to discuss in this is not only non-farm payroll, but also its components. And one of them critical reading we are about to get is in less than 10 minutes. We are going to get the US ADP reading, and we will look at that and the price action straight away on it. So I'm just going to quickly go through these ones. So obviously the importance of the US NFP is because this is the most important data out of the US. And the US being the biggest economy of the world, it is likely to affect the entire market throughout the world, not only your FX, your equities, commodities in the US, but also across the world as well. Now, what makes the US NFP reading? This is what we're really going to look at. In terms of what instruments to trade, you can always trade Forex, you can always trade equities and commodities. Forex, anything which trades against the dollar. So for example, euro dollar, sterling dollar. Again, we're going to look at these ones in more detail. In terms of equities, the US future markets, such as the S&P 500, the Dow Jones, the Nasdaq, and of course the European markets, we will see just in a minute when we are going to get the data, how the movement is really going to be coming over there as well. And then after that, we are going to do the current state of, we're going to perform the analysis for the markets and define the strategies and the levels for that. Now, going back to the agenda of the ADP data, so on Forex Factory, or you can always go to our website, AvaTrade, and then look for the economic calendar there as well. Again, at 12:15, this is a GMT time because I'm based in London. So for me, it's going to be 13:50. We are going to get the ADP non-farm employment change. This is the first data that we get ahead of the US non-farm payroll, which usually comes on Friday, but this time it is coming on Thursday. Doesn't happen very often. It is a very rare case, but because Friday is a national holiday over in the United States, so we're getting the data on tomorrow. So the expectations with respect to the ADP non-farm payroll is 2.8 million in terms of a new employment numbers, right? Previously, we had minus 2.7. Now, folks, this particular number is really going to move, as I said earlier, is really going to bring huge movements for the S&P 500 index, which is really here, right? In terms of that, we know that this is the weekly chart. Forget about all the price levels, everything on that. I'll discuss everything in detail right now. What I want you to focus is, because we got 4 minutes left quickly, to know the price level. So this is your weekly candle for this particular week, and then we know that where the lows and highs are, and then more importantly where the 50-week moving average is. And we're going to draw our trend line just right here. I'm going to quickly get rid of these ones because we really don't need this particular rest of them right now. And then we're going to go into a weekly 15-minute time frame quickly, and then see where those important levels are. Now, again, there are these moving averages. We're going to completely ignore all of them. In fact, I'm just going to get rid of the unnecessary indicators on that for the time being, and then just going to focus on the price action. For the moving averages, just completely ignore them. We're not going to pay attention. The only thing that we're really paying attention is the price and the price itself. In a 2 minutes time, we're going to see massive movement. Similarly, we're going to do the same thing for the Dow Jones Index. We know, okay, this is the weekly candle. We know where this is. We are still trading below the 100-week. This is your 100. This is your 50. This is your 200-week moving averages. Obviously, they change the moment that we change the time frames. Right now, what we're going to do is we're going to draw the two trend lines, the upside and of course the downside, and we are expecting the price to, we're going to see that how the price is going to really perform between these levels. So that is what I'm really looking at. So when I go into a 15-minute time frame, I can adjust and then bring out one of those two levels that we have discussed. On that, clearly the lower level is very, very low. It's right over here. So these are the levels coming from our weekly time frame. Now, again, quickly, I'm going to do the same for the euro dollar as well. We'll see where those bigger levels are, and then we're going to move these ones to those particular ranges, because the thing is that the unemployment number is highly likely to bring immense amount of movements in the market. So I'm just really showing you guys how to really trade these important levels. So you can see that this particular level is easily achievable for the euro dollar. It is within the range. Price is highly likely, if the number is really, really good, dollar is going to gain strength. This is going to go down. And then similarly for the Dow Jones Index, if the data is really good, we should see a sharp increase. The price is trading more closer to the upside for the Dow Jones. For the S&P 500 Index, we are very much we didn't draw the upside on that one. So let me just quickly put that line as well, so that we know. There we go. Now we go to 15-minute time frame. We have less than few seconds left before we get the number. And now what I'm going to do is I'm going to bring out the Bloomberg professional platform. This is where we are going to get the numbers as the feed comes. But of course, what I'm going to do for you guys is I'm going to show you guys why it is important for you guys to follow, because these numbers, I'm going to tweet them as they come pretty much straight away. So we will keep this one over here. We'll get everything ready for you guys, and then we're going to look at the price action and then see how the price is. There you go. ADP US added 2 million plus. This is 2.3 million plus. These are the reports. Now, obviously, this is going to produce immense amount of movement in the market. So let's quickly go. The tweet is gone. That is what the important thing is for you guys to see. Now let's see how the movement has really happened. Now again, on the 15-minute time frame, we're not seeing much of the movement in there because the price was very much on par. The data came very much on par what we were expecting it. Again, I can show you by going into the Forex fact. Again, we go over here. We are slightly below the expectations because expectations were 2.8, but we are 2.3. But still, you can say it is pretty much in par, much better than last week, but not as good as the forecast was. So the market is expecting, it is reacting to that particular news. Now, in terms of equity price action, we do not have much of a reaction going over here, but in terms of the euro dollar, we are seeing some sort of a strength coming, and for the euro, and it is moving to the upside. We can quickly look at the gold prices as well, going into the 5-minute time frame. See that again, the data was a slightly more abysmal, slightly more weaker. That's why we're seeing this upward journey, but obviously it wasn't too far off the expectations. And this is the reason that we didn't see this massive explosive moves, or it wasn't down much than the expectation as well. So just a sort of a very muted reaction. So that means that today's number, the ADP number, which has just come out, which we have pretty much done the live analysis of, that has set up a bit more mediocre tone for the US NFP data, which is going to come in tomorrow, and then we're going to get the unemployment. Now remember, for the US unemployment rate change, the expectations are 12.4 for the unemployment number to fall further. The unemployment claims are supposed to be going down. We are expecting them, to be 1350. And then see how that comes in line as well. I don't know why they have a B. They should have a K. That is obviously a mistake over here. The forecast is for the unemployment numbers to go down. So let's see. But so far, what we know from the ADP is that the tone is set for a sort of a mediocre number going forward, and then that is a number that we're going to be very much focused on. But another component of this ADP is also the ISM manufacturing PMI. So see that the expectations are still in the contraction territory. How so? If the number stays below 50, it is contraction. But if the number stays above 50, it is expansion. If we see a number which is again very much in line with this 49.5 coming at 3 p.m. London time, then again the tone would be the same. It is going to echo the same message. Get ready for a mediocre number, meaning you don't expect big moves in the market. Again, now the upwards price action for the gold price has started to ease off, and it may see some sort of a retracement. Now this could be the opportunity that many of you perhaps been waiting for. Again, this is a greater level of support. Now, having said all of this, now let's continue with the price action analysis, and then let's see where are we moving with the price from here. Now, as always, folks, to begin with, we have 3 different moving averages on a weekly time frame, and we measure the price move according to that. First of all, it is your 50-week moving average shown in pink, then is your 100-week moving average shown in orange, and then 200-week moving average shown in green. Now, like I was saying to you, then now we can get rid of these trend lines. We don't really need them. We're just going to move them on the side. Now, what we're seeing is that the price hasn't been able to cross above these 2 moving averages yet for the time being. Now, obviously, it can happen on Friday, but right now the price action has started to show more and more weakness on a weekly time frame. This is an area of concern. Now, especially if we break below the price action of a last week, the week before that, with the low of this one, it will be even more Sorry, I think we got cut off with the voice, so I'm back here. So what I was saying was that, okay, so if we break below this particular price, it is highly likely then the price action is really going to continue to the downside. So give me 1 second. I just gotta fix one thing here. Okay, how's the sound? Is the sound good? Seems like, yeah, okay, seems like it's good. Okay, all right. So as I was, let me just quickly look through some of the questions as well in the meantime, if you guys have posted any of the questions. Okay, yeah, it's all good. All right, so in terms of a price action, we're going to continue. So we really focused on the low of this one for the Dow Jones Index. And remember, the Dow Jones Index is the weakest index between the S&P and the NASDAQ index. Now, the support level, someone is asking me what is the support level. The support level is really what you can focus is the previous week's low. That is what we're really looking at. So this week's low is really the support levels. This is MT4, so you know you can really, you have the same chart as myself. So I'm really looking at the low of this one. If we break below this, it's really gonna be a very it's going to be negative for the price action. And then the next support is the low of the previous week at that. So these are the two different support levels that we're really looking at. But don't lose your hopes if you're holding a long position, because when we start to look at the weekly price action, the same price action of the S&P 500 index, things do look very different. Now, again, we're going to move these ones to a different, I'm going to use the same concept here as well. So I'm going to move this one just below the last week's low here. So what you can see is that this week's low pierced the 50-week moving average, but then we are well off that. So that is very positive. This is what I was saying to you, don't lose the hopes, but don't have too much of a hope as well. Why? Because the last week we had a lower high. This week again we are forming a lower high, and this is not very positive. This shows some sort of a consolidation, capitulation perhaps forming. So in terms of a price action, if we break, first of all, below the 50-week moving average, it will be pretty much clear that we are going to break the previous week's low as well. And then also, once we break that one, it is going to be pretty given that we are also going to violate week before that, the low which was 1 week before that as well. So then the really support level that you're really looking at is your 100-week moving average. And that is where the price can find some sort of a support. If it finds it, great. If it doesn't, it can always happen that the price will come in near enough the low of this candle and then moves back above. If that happens, that's great. That means that the upward trend is back in play. But if we break below this, folks, then it's going to be pretty much a bloodbath until the price continues its journey towards its 200-week moving average. I hope that this really makes sense for you guys, because I'm doing a very deep and live sort of a price analysis. We're not relying on any indicators like RSI, MACD, this and that. What we're doing is we're studying the price by looking at the lows and highs of the previous weeks, because they command a lot of respect. And the second thing which commands a lot of respect, in fact that is the first thing, is your moving averages. And moving averages on a bigger time frame again commands the most amount of respect than anything else. Does that make sense to you guys? This is your opportunity. If you have any questions, so please do feel free to ask them. Okay, now we're going to move on to gold. Again, we're going to go to weekly time frame. Going to make this one a little bit smaller and then see where exactly those important price levels are. Now, if you wanted to know why these lines are here, I have put out the video on our YouTube channel. How do you chart the moving averages? How do I put the moving averages? Is that what you are asking me? Okay, so in order to form these moving averages, all what you got to do is you got to go to tools, insert, say indicator, go to your trend, go to your moving averages, and from here you just get your moving averages on the tables. It's very, very easy for that. So again, I'm gonna show you over here, and then if you want to change the period from 100 to 200, you change it, you change the colors, and then you press OK, OK, OK. And that's pretty much how simple it is to put these moving averages on the table. Now, do you use expert advisor? No, I don't use any expert advisor. I don't rely on anything at all except for the price and the price action. Again, going back to our analysis, if you wanted to learn a little bit more about why these two support zones are over here, the analysis was done this morning on our YouTube channel. I did the detailed analysis of it. So, but now I'm going to delete these ones for the time being, and then so that we can really look at the price action. Now, folks, I think that the price action looks, what are the MAs you use? Okay, Peter, the MAs that I use is 50, 100, and 200. So again, on a weekly time frame, this is your 50, this is your 100, and this is your 200. All right, so in terms of a gold price action, this is incredibly bullish what we are seeing over here. A lot of strength is there, right? And then for me, the biggest target for the price is the 1800. The moment that we touch that 1800, there's a lot of FOMO about that, but the fact is that the moment that we are going to break that 1800, the actual FOMO is going to kick in at that time, and traders are really going to see, okay, you know, we should have bought it when there was some sort of a retracement. And that retracement, my friends, are really happening as of today. And it can again happen on Friday if the US non-farm payroll number comes a little bit weaker. But that doesn't mean a weaker number doesn't mean that the long-term trend is really going to ease off, because the long-term trend is here to stay. As the price action shows us, we're going to continue to make higher highs, and this is what the price action is really telling us. Charts such as, no, I don't trade on Joji on a 1 minute chart. I think that is a waste of time, really. It is purely just too much of a noise. The least that I will trade would be a 15 or 30 minute. 30 minute is really the time frame that I will really trade, and 15 minute is where I will pick up my support, my entry level, not support and resistance. Support and resistance levels are always come from a bigger time frame. The smaller time frame we will always use to execute trades. Again, I think it is a much bigger topic, and that we can discuss in future analysis. Now, in terms of our support with respect to gold, I'm really looking at the all-time high, which was 1929-27. But obviously we have it over here. You can just slightly push it up. But 1927 was the all-time high. That is a target I'm really holding on to. In terms of my support, in terms of my support zone that I'm really looking at, I think we are really coming to one of those support zones as we speak. And that support zone is just near the 50-day moving average. Let me just make a little. Now, when you go to a weekly time frame, that 50-day moving average between 16 to 17.27, that is your immediate support zone, and the target remains over here. If the price comes over here, this is a really good price level to get back into the trade if you are not in, perhaps. But another important level of price level that can also act as an area of support, because this is very low on the curve, can also be, I'm just going to find this one just slightly a little bit better, and it can also be just at the bottom of these particular candles. You see that this candle, this is a huge wick. I think this can also act as an area of support. So anywhere between, let's say that 1746 going all the way to 1756, that is again another area of support that we can really, see the prices coming in and then perform and then bouncing off from here. But of course, the better level of support remains over here, or remains at least near the 50-day moving average. Okay. folks, I think this is where we pretty much, call it a day, but I wanted to give you guys the opportunity to ask me some questions before we go. So please fire away one or two questions. Again, someone is asking what moving averages that we are using. As explained before, I use three different moving averages: 50, 100, and 200. All right. Okay, folks, I suppose this is where we say goodbye. Thank you so much for how NFP data, okay, well, now a lot of questions are just coming all of a sudden. And can you please share if AvaTrade changed overnight fees? I don't know. That is something to do with AvaTrade. I don't work with that kind of stuff. How is the unemployment? How is the unemployment rate last month? The last month unemployment rate was 13.3%. We've shown you earlier. Go back to the recording of this on YouTube, and then you will see that. For a USD CAD, please. Okay, Amir, USD CAD, again, USD is a dominant force. Let's see if the data is better. The dollar is really likely to pick up steam. And then what are you feeling? Okay, how NFP data will affect gold price? We've already discussed that. Again, go back to this recording and then see it. Likely to bring higher volatility for gold. If the number is too good, we may see some retracement, and that retracement could be an opportunity to buy. All right, folks, I'm gonna call it a day. Thank you so much, and I'll see you guys next time.